Hello and welcome to Wealth Within's weekly hot stock tips. I'm Filip Tortevsky, Senior Analyst at Wealth Within, and we're Australia's most trusted stock market educators. Every Tuesday night you can see me on the Australian Stock Market Show live on YouTube alongside amazing professional traders Janine Cox, Dale Gillham and Pedro Banales. Now in the show we answer important questions around the market, cover lots of great stocks and help you become a better trader. Today we'll unveil what's hot and what's not for you, our viewers. But before we dive into this week's stocks, I am joined today by Pedro Banales. Pedro.
Phil, how's it going?
You jumped the gun. Good morning.
Good morning. Yeah, I'm feeling positive about this week, actually, after the market's stellar rise last week. So
Carnage last week, but the market had closed near the open, showing buyers really wanted to continue to take it higher.
Definitely. So so good stuff to come.
Look out for that. All right, so let's get straight into it. On your screen right now is the watch list of the top 200 ASX stocks. Now, Pedro, I'll let you take this one away, mate.
Yeah, mate. Domino's Pizza at the top here, 19.41%.
Whoa.
That came on the back of some news that they were going to shut down some unprofitable stores. And I believe I think that there's some in Japan as well that they're going to shut down. With all the nice food over there, I'm not surprised.
I'm surprised they even operate in Japan.
Yeah, same with me, exactly. Jeez. So that's the catalyst for that rise there. Chart is looking, gappy at the moment, so don't jump in just off this news. Let's see what happens, whether it can sustain this level here. But it is a positive sign for that stock. Next, we've got Collins Foods, Lynas Rare Earths, of course, on the back of the news that China was going to restrict some critical rare earth materials to the US. We've got some other mining type stocks. We've got a few of the technology type stocks. So Codan has been on a huge run. More material type stocks. So it's a little bit of a mixed bag, but we did see the materials sector actually have a good positive run last week. So I'm not surprised to see many material type stocks on there.
Yeah, fantastic. Now the worst?
Now the worst, we've got Beach Energy. So energy sector did underperform last week. So there will be a few from the energy sector there. We've got some, just consumer discretionary type stocks. We've got some technology, mixed bag again, but again, common theme, the energy sector there. We've got Nine Entertainment, that one's struggling to get off the ground. PEXA Group, which is going to be one that we're going to cover off later on. So not much of a theme, but we did see big moves in some of these, and they might be news related. Keep in mind that we are coming into reporting season, so you're going to see these types of move either on the downside or on the upside.
Yeah, very interesting. I mean, particularly with energy, that is at, I reckon, a line in the sand type moment, that market. If it breaks lower and takes out those recent lows, I think it's one to forget. But if it can hold and break on up, it might be the moment for energy. Given it is, in the news, in the media, it's the hot market right now that everyone is talking about. But anyway, what is hot in the market this week? Well, on your screen right now is my hot stock tip for the week, which is Data3 Limited, stock ticker code DTL. Now on your screen is the charts of DTL. Let's start things off on the monthly, because this one here, it's in the tech sector. Very obvious the tech sector is humming along, has not stopped in 2025, 24 was the best performer, 25 continuing on with it. Now this one, in 2024 actually was falling away. So that's quite interesting, but the way it's fallen, where it is right now from a technical perspective, to me, I think it is priming itself for the next leg up. How long that leg will be, it's quite interesting. If tech holds, then you could argue that this one's going to run on the coattails of that and start to take those all-time highs. But regardless, it does look like it's turning. So that's the important part here. And I've marked a few retracements on this one. You can clearly see since, these lows through here in September 2014, as the uptrends evolved, we've only really had 4 major pullbacks. We've had a pullback of 35% back in 2017, a pullback of 50 in 2020, then we've had 41% pullback in 20 again. And now we're coming into that 40% in February 24. So anywhere around that 40 to 50% mark generally signals the extension of these major pullbacks in this long-term uptrend. And the fact that we've come back to the longest term gradient of rise and touched it exactly and risen. Look at the buys picking up this in January 25 and going on with it in February. that is a clear sign that this level is being respected, and it is one of the most significant levels in terms of gradient of rise. What's also important is we've matched that with a huge horizontal level of support and resistance, a previous all-time high where the market failed to break through, got above, found support, and now it's finding support a second time. One of the most important levels, dating back from 2020 on this stock. So in terms of momentum and horizontal support and resistance, it's hit the most significant levels.
Yep.
Combine that with a 40% correction, it's time for this one to turn. So all things are pointing to further upside here. Now it's all about getting your strategy right on the weekly chart. As I said, you could apply some momentum lines here on the downside and think, how am I going to, line this up for the best risk reward scenario? Because it could get to about $7.90 and then start falling away. So it's all about getting your strategy right here. But the only other thing I wanted to add on the weekly chart is this volume. Now have a look. The volume that's come in on the 20th of December ties in, and I'll bring this cross tool here for you to have a good look if my mouse will work. Look at the volume that's come in on the 20th of September, which is generally around this low. The other times we experienced this kind of volume, this was coming into another short-term low, which sent the market up and sideways over a little period. Another significant time that it came through was around this period through here. Another significant low and the market came through higher.
All that sell-offs.
Sorry?
They're all at sell-offs.
Yeah. And then another one through here was, again, right at the low before another major move up. So at critical, significant market lows, we've seen volume tick over what we saw recently. So that's nothing to sneeze at there. And given we've turned, another important factor to keep in mind and add to your analysis that, hey, we potentially might be coming into a major low. When you stack on all the other stuff we just spoke about, the probability leans towards that. So as I said, right now, this one is all about getting your strategy right and picking up what the market is going to give you moving forward. But anyway, that is it for my hot stock tip. Now, we're moving on to a stock that should make you proceed with caution. Seek Limited, stock ticker code SEK. Now, Pedro, I'll get you to take away this one.
Yeah, mate. So another one in the technology sector. And it's interesting that, as you mentioned, technology was the best performing last year, yet this stock has been going sideways since 2022. With a lot of volatility, keep in mind, you could have maybe traded this short term if you were an experienced trader, but really, if you had bought in around September 2022, you'd just be at the same level as you are currently now. So the risk now is that even though it has found some support and some support around this longer term momentum line, is that it could actually just stay range bound and then just trade up to that $25 level only for it to come back and then maybe find some support again, maybe start trading sideways until it starts to get to that kind of apex of the, get squeezed in between these levels and that momentum, and then it'll either pop to the upside or pop to the downside. However, it could be that it does pop to the upside. We'd need to wait. Maybe some reporting season provides a little bit of clarity here. But at the moment, there's no reason to be in this stock until it provides a clear direction. And that could very well be on the downside as well. If we have a look at the actual levels here, if you were to take an entry right now, just say, we've only got 12% upside and we've got 16% downside. So roughly you're in the middle. There's no real good risk to reward ratio here. 12% isn't enough for me anyway to justify a trade. So at the moment, definitely until it provides more clear direction, you just be watching it.
What I'm seeing with this one, I totally agree with you. Not so much a trader stock at all because, I mean, if you are a trader that likes to trade ranges, sure. But if you're more medium to long-term trader type active, probably not the stock right now until it gets through those levels you said. But if you're a passive income looking for income, the stability this one's giving, I mean, like you said, if you picked it up September 22, it's not really going anywhere.
Yeah.
So you'd be churning a nice income. I don't know what it's paying.
Yeah, I was going to ask,
Yeah, I'm not sure what the dividend and what it's paying, but it's in a sector that's, strong. It doesn't look like, it's in that long-term uptrend. It doesn't look like it gets too volatile apart from what we saw during that COVID period. It's coming off a huge sell-off. For an income play long-term, maybe, that type of investor could be looking at it. But we're here looking for growth because it's an opportunity cost of your money. And right
Definitely.
now, I agree with you. If it can't get its head above $26, then this one does have more chance of sticking sideways or going lower than going higher. Now, do you want to have a look at the weekly chart as well? Because there's some interesting stuff going on with the volume.
Definitely. So this is why, you know, from a shorter term perspective, and if you are an experienced trader, you could possibly make some, you know, some money if you were able to, you know, get in and out of these moves. But we have seen some large volume come into, you know, these, much like DTL, as you mentioned before, when it gets sold off and then for it to rise again. You know, we have these large volumes coming in, significant lows, you know, these sell-off periods, that was COVID back there, you know, and now we've got that significant sell-off. However, we have already had the run up from that significant low. So now it could be that we're still finding that next low.
Well, does it make it easier for you as a trader to go, all right, if that's a significant low, there's the huge volume, that's a significant low. If this holds right now, if price holds here, I'm thinking, all right, it's a fair call to say I'm going to be a bit more bullish and take it to 26 levels. That's the play. But if it starts taking this out, then you're going, mate, forget about it. This is going bearish.
Even if it takes out this low, you know, that low of $21, you definitely
wouldn't want it?
I wouldn't want it for sure.
All right, well, that is it for our caution stock. Now, lastly, what's not hot in the stock market this week? Well, PEXA Group stock, ticker code PXA. So let's get into this one now, Pedro, mate. Let's go on the monthly first, because you can clearly see that last week wasn't a great week for it.
Yeah.
But let's go into the monthly. Now, this one here, and this is a beautiful thing about, you know, what we do from the technical aspect and follow price. It's a perfect example because around these levels through here, this was our hot stock tip, or we had it on a caution to watch. I can't remember exactly, but last year at some point, we liked it around here.
Yeah.
Now, you know, as the stock gave a nice little move up through here, it fell down and it gave a second move up. Around these levels, you're starting to think, all right, you know what? Maybe my trade isn't going to play out like the way I think. Or maybe that is the capacity of where this stock is. Buyers don't want to push it any higher. And there's probably something a little more wrong than meets the eye. Now, we've got this very nice momentum line, if I can just apply it through there. And all the way through here, you might be thinking, okay, if you're not looking at technicals, you'd be still holding this stock thinking, all right, well,
yep.
I like the story or what have you. I'm going to buy it for the long term, and that's totally fine because it is trading near these all-time lows. But from a technical perspective, and when you're talking about opportunity cost of your money by sitting in a stock doing nothing, well, you've got a very clear signal here. It's broken through long-term momentum strongly, taken out these lows here. There is a higher chance that this one's going to fall away and potentially test that all-time low again.
Yeah.
So it's turned from looking good to not looking good, which can happen, and that's your job as a trader. Your job at the end of the day, or an investor, is to identify at the earliest possible moment when things aren't going to turn in your favor and get out and try and, you know, look for the better opportunity, right?
Yeah, definitely. I mean, why would you want to be in a stock that's falling when you could be in a stock that's rising? Exactly. And it's that opportunity cost that you mentioned. You know, this stock has fallen heavily. We'd have to see why. It probably reported recently. But, you know, if we go to the weekly chart here and just we see these shorter term movements there, it's actually gapped down and it's closing quite low. So there's big volume as well. So there's no reason why you know, you'd want to be in this stock. But at the same time, you could actually apply a trend line. So if you were out, if you did manage to get out at a good time, you could apply a momentum line anyway, just you know, above these peaks there. And just say, okay, well, until it breaks above this, I'm not happy to get back in, or you know, I'm not happy to even have a look at it, because it does tend to trend fairly well. So when it comes of these lows, it trends nicely, and then it trends down on the downside, like it did much, you know, through this period back here in 2022. So. Yeah, I agree. This stock is not looking good, and I wouldn't see any reason to be in it at the moment.
Yeah, and just to add on top of that one, you know, these trend lines are such you know, good tools to keep in line with that momentum, because you could have even gotten a signal much earlier through there, as you know. You know, there you're probably thinking, all right, maybe not, something's turning here. Failed the highs. I don't know. Then it's starting to show you signs here on the longer term one. Boom, it's broken there. At this point, you'd be thinking on the weekly time frame, I don't like this stock. But look how much opportunity it's given you, or it's telling you, it's screaming at you, hey, mate, I don't want to go higher. 1, 2, 3, 4, 5, 6, 7 weeks. and it doesn't want to reverse. It's holding under the trend line.
Yep.
And then we get this, which is normal, right?
Yeah.
The momentum's down, so it's obviously going to start falling. So yeah, that line that you've marked is very important, and I think one to watch for this one, but stay away for now. All right, well that is it, and thanks for watching this edition of Wealth Within's weekly hot stock tips. Remember to tune into the live Australian stock market show on YouTube from 7 p.m. Eastern Time every Tuesday night. To find us, just type Wealth Within Live in the YouTube search. And remember to have your phone ready to call in live to speak to us so we can answer your questions. The number is 03 9290 9988. Or you can email into the show right now by sending your questions to info@wealthwithin.com.au. Now, if you want a copy of Dale's first book, you can still get it for free. You just have to pay the shipping. You can order it from our homepage, wealthwithin.com.au. And I hope you've enjoyed today's episode. And as always, thank you, Pedro, mate, for your excellent comments.
My pleasure. And doesn't DTL look great, you know, especially if the info technology sector manages to have another stellar run this year?
Oh yeah, absolutely, mate. I mean, that's the point of what we do here, right? Pick the good ones. And thank you all for watching. For now, goodbye, good luck, and good trading.